Indian equity markets are looking a little wobbly at the start of the trading week, and that's on account of global factors. In the absence of any major domestic cues, the attention shifts globally. And what's the latest that you've heard? The high frequency indicators that are emerging from the US have actually turned a little negative. The latest, of course, was a purchasing managers index print, which was not very good. And the other aspect is also inflation expectations, which is the expectation of inflation going forward, that has shifted upwards. What that tells you is that there is an expectation that the US economy is not going to see rate reductions by the Federal Reserve in the near future, or may not be as much as was previously expected. And so there is an expectation that the bond yields will remain elevated. The risk-free return as a result of which remains high, and there is a movement of capital that has been going on outside of emerging equities and into the US market, and that will likely continue at least for now. And that is evident in the FII number, the foreign institutional sell number, that you've witnessed over the past several sessions here in India. That is likely to continue. On the domestic side, you have the retail investor that perhaps is showing a little bit of fatigue. And this is evident in the SIP numbers, not in the overall flow, but in the fact that cancellations have started becoming more elevated. And that's because SIP returns, particularly over the last 1 year, have started turning negative, and maybe some new investors are not having as much patience as those that have been investing for a longer period of time. Those are two aspects that are playing out. Of course, on the domestic front, there's also earnings to take into account. We're done with the earnings season for the third quarter, and you haven't heard anything very dramatic in terms of an outlook for the fourth quarter that is dramatically better than the third quarter. And so you might have to wait for some of those numbers to come through, where there is a narrative of an improvement in spending by the government, an improvement in capex, but you may only see that pan out starting April this year, that is after the fourth quarter results start coming through. So for now, things are more negative than positive.